Good morning everyone, 11:30 on the clock. It's time for Market Fatafat right here on ET Now. I'm Mubina Kapasi and take a look at the Nifty. At this point in time, we seem to be more or less sideways, now lower by about 1/3% off the day's high. Undoubtedly still holding on to 10,700 with a lot of conviction, so good going over there at least. And do remember, we are not in an isolated, declining trajectory. This has been the case across the globe. So relatively, the Indian market still seems to be showing some signs of stability. The small cap index, however, is taking it on the chin. A big underperformer, 0.8% lower for the small cap index. But the show is Market Fatafat, where we run you through the top list of stocks that are buzzing and the big movers in trade today. We have a team of researchers standing by to highlight the top stocks that are buzzing. And on the technicals rather, we also have Sameet Chauhan from Angel Broking. So thanks to all of you for joining in. And without any further ado, let's kick start with the very first stock on our radar. And it's got to be all about GST, the rejig that has come by on Saturday. Karanya, multiplex stocks, what's the impact you're seeing?
And even the multiplex industry as well, both of these stocks, like you can see, are in focus. They were, however, reversed the up move that we saw earlier in the day. But yes, the tax rate for movie tickets above $100 has been brought down to 18% from the 28% slab earlier. And also the tickets which were taxed 18%, which were under 100 rupees worth of cost, have come into the 12% slab. So that's an important change which has transpired on Saturday at the GST Council meet, on back of which the multiplex stocks are in focus.
So yeah, PVR is off the day's high, but Inox is still managing to hold on to those gains higher by a little over 2%. Kunal, Apollo Hospitals, what are you seeing over here in terms of chart patterns?
So, it's one of the most steadier charts in terms of the beta nature of the stock price. It's already gone through or rather given a weekly breakout. Over the last 4-5 weeks, there's been a steady uptrend building into Apollo Hospital. And now I believe that the stock is also on the verge of a swing breakout on the very, very short-term charts. All of that indicates that the trend is on the upside, and I think for a stock which is low beta, especially in a market condition which is becoming volatile, I think it would be a very good buy at current levels. 1350 is the target on Apollo Hospital, which I'm suggesting a buy with. Stop us at 1225.
All right, continuing with the story with respect to the GST rate cuts that had been announced on Saturday, the next stock we're flagging off is Apollo Tyres. Remember that the company, the council has kept the GST on new tyres unchanged at 28%. However, retreated tyres, there the GST rates have been cut to 18%. Now take a look at these tyre stocks. They are showing a decline coming by in trade today. They're off the day's high as well. 236 is where Apollo Tyres is trading, with cuts of about 3% in today's share price. Pranay, over to you then, continuing with the GST story. No relaxation for cement companies.
You're seeing names like India Cements, JK Lakshmi Cement down between 2 to 4%. Earlier last week, these stocks had rallied anywhere between 5 to 7%, especially in the latter half ahead of the meet, as it was expected that cement is not really supposed to be categorized as a luxury good or a sin tax item. But the reason why it's not seen any relaxation is because of the high contribution to the exchequer. Finance Minister clarified that Indian auto parts as well as cement companies, the two together account for about 33,000 crore in terms of contribution, and hence no relaxation is possible at present. Therefore, these stocks are down.
1.5% lower for a JK Lakshmi Cement, and in general today cement stocks are seeing a bit of a correction coming by. Siddharth, JSW Steel, I think this is one of the biggest intraday declines we've witnessed since late October approximately. But yeah, the decline in some of these steel counters has continued, and that's witnessed even in a JSW Steel.
Well, metal stocks are correcting, and why they are correcting, Mubina, you would know better than anyone else that base metal prices are correcting, which is also having impact on the ferrous side. And JSW Steel is facing the brunt in today's trading session, down by 3.65% as of now. We are seeing formation of short positions, and interestingly, 310 and 312, that level in last few trading session has emerged as a strong resistance. So watch out for this name. Short positions and volume suggest that there can be further downside.
All right, so yes, steel stocks continue to see a correction. JSW Steel at the day's low as we speak. Moving on, even CEAT, of course, is seeing some correction along with the rest of the tyre pack. We already flagged up the reason, but let's address technicals. Sameet, thanks for joining in. What is the strategy you would adopt here?
Yeah, as you pointed out, the entire tyre space is seeing heavy profit taking in last couple of days. As far as CEAT goes, 1350 is the 200-day moving average level, and 3 days back the stock managed to find strong resistance around that level, and since last couple of days the stock has been declining. So going ahead, 1250 is the level to watch out for. The stock is now trading around its important support level. So once the stock slides below 1250, we could see this selling pressure getting aggravated. So as of now, one should wait and watch, and those who have bought it at lower levels or those who have bought it couple of days back, they should keep a strict stop loss below 1250 on a closing basis.
And it's a 3.5% of a downtick witnessed in a CAD. In the auto space, Karnia, Goldman Sachs has downgraded Hero Moto. What are the reasons?
Well, the reason is that they've met the management of Honda over the weekend, or rather very recently, and they picked up that Honda is actually getting very aggressive and pushing itself a lot, especially in the entry-level motorcycle segment, which is a key for a player like Hero MotoCorp. And they think that given the kind of lineup that they have, given the kind of strategy they have in place, they can actually be a big threat to Hero Moto's market share. Apart from that, they've also highlighted the fact that Hero's recent scooter launches have not done very well, so that's another could be a big dent to the company's growth prospects going forward. Given the fact that their R&D is also not very strong, entry level is under threat. That is something that they've highlighted in a big way. They do see that yes, there could be a demand in the rural markets in the run-up to elections, but it may or may not impact Hero Moto's volumes in a big way. So in the near to medium term, they believe that the volumes as well as the results for the company are likely to be fairly muted. Hence, they've downgraded it from neutral to sell. The target that they have given is a /1 2,773 rupees versus 3,175 earlier.
All right, so that's Hero MotoCorp. After that downgrade, it is seeing a downtick coming by of 3.5%. Okay, there's another brokerage note coming in this time around. It's from Morgan Stanley, and they have a view on Sun Pharma, where they are maintaining their underperformed stance with the target at 470 rupees. They have spoken of certain approvals that the company has received in the recent past, and that proves that the company continues to build on its specialty portfolio. The stock price, of course, has corrected quite a bit. Now it's at just 430 rupees. The target price for Morgan Stanley is at 470 odd rupees. But, we caught up with Dilip Shangvi. A very, very rare management, almost never appears on television. He maintains a positive outlook on the pharma sector, and he expects double-digit growth in the pharma sector over the next 5 years. Listen in.
The US is positive about the future growth of pharma sector.
So do you expect the US pricing to go up in 2019?
It's a difficult to answer as a generalized question. There will be some products which are in short supply where costs have gone up, may go up.
And sir, do you expect Indian market to do well, more than double-digit growth over the next 5 years?
Yes, I think looking at the macroeconomic situation and also I think our demographics, it has a potential to grow by double digit.
So one final question, sir. Will majority growth come from launches in complex and specialty spaces?
No, there will always be growth coming out of new products, growth coming from volume increase, market share increase.
All right, that of course was Sun Pharma for you. Moving on, SRF is a stock that we have flagged off. Pranay, what are you witnessing today?
Well, actually there isn't any news, but for the second consecutive day it's seeing heavy selling. Today's volumes are the highest that we've seen in the last 2 months. Even on the F&O side, you're seeing an open interest built up, increase of about 10%, which is also the case because we are heading close to the expiry of this series. The stock has actually done very well for most of the year, but last 2 sessions, it's cracked about 11% with high volumes.
All right, so SRF, it's one of the top losers today on the mid-cap index, significant selling witnessed over here. Siddharth, over to you then on an M&M Financial. Why are you flagging this one off?
Well, not many NBFC stocks are doing well. Yes, some of them have made comeback, but if you look at the consistent performance, then M&M Financial is one name. Today too, Mubina, we are seeing around 2.8% rise in price. This is happening on back of formation of long position that's there. And 200 DMA, that level or around that level, stock has now formed a strong support. So it's positive observation when it comes to M&M Financial.
2.8% higher for an M&M Financial, keeping it within the NBFC space. Kunal, you're flagging off PFC. What is the strategy you would recommend over here?
So, steadily the stock has, continued to rise in the last 3 weeks. We've seen the stock, coming back and sort of recouping a lot of the losses it had seen, I think earlier last month. From 85 to almost 100 levels, and even at current levels of 100, it's breaking some short-term, price patterns on the bullish side, which I believe could maybe continue this uptrend for PFC over the next couple of days. So 105, 106 is the target range, which I'm suggesting a buy with. Stop loss at 96.5.
Alright, PFC, it's higher by 1.8% today in trade. Here's a stock we don't flag off very often, and that is Healthcare Global. A bulk deal that has taken place is keeping the stock active today in trade. It's 1.5% higher. Now, Pabrai Investment, that's Manish Pabrai's investment firm, has sold around 21 lakh shares in the counter, and he sold it at a price of 198 rupees. The buyer has been Sundaram PNB Mutual Fund. They've bought about 10.9 lakh shares at the same price point. So this rejig is something that is keeping the stock price active. It's 1.5% higher in trade. In the pharma space, Karunya, an approval for Unichem, how important is it?
Well, it is important, clearly. Look at the kind of up move the stock price has also seen intraday. It was higher by more than 4% earlier in the earlier part of the day. Of course, there's been a bit of a reversal there. It's still higher by 1.5% as we speak. This is because the company has received ANDA approval from the US FDA. It's for a drug which is called pramipexole dihydrochloride. It's a generic version of Mirapex tablets, essentially used for treating Parkinson's disease and for moderate to severe primary restless leg syndrome. So this is an important approval definitely for Unichem, on back of which the stock is in focus.
1.3% higher for Unichem.